Hi, it's Mark Ferguson with InvestFourMore, and thank you for watching another one of my investing videos. I know I've been slacking lately. I haven't been making very many of these, but I've been pretty busy with my new mentoring program, and of course, I've got 11 flips going right now, trying to buy more rental properties, and my real estate team has added a couple new members, so we're going strong there. But I'll try and add some more videos as I can. Today, I want to talk about investing in single-family homes versus multifamily homes. What are the pros and cons of each property? Is there a better option? Single family better than multifamily? Is multifamily better than single family? Or does it just depend on your situation? So I want to discuss that in detail. Again, if you guys want more information on investing, please check out my blog, InvestFourMore.com. I think I'm up over 400 articles now. All of those are written by me except for a few that are guest posted from some other people. So, looking at single family versus multifamily. All 16 of my rentals are single family homes except for one duplex. And the reason I have invested in single family homes myself is, for one, I can get better returns in my area than I can on multifamily. There's more single family homes available than multifamily homes in my area, so it gives me a better chance to get a better deal. Usually turnover and maintenance is less on single family homes, and then it can be easier to finance, and the resale can be better on single family homes versus multifamily homes. So we're going to look at those. I'm not saying that multifamily homes are a bad investment. For some people, they're an awesome investment and they make perfect sense, but for me, I've really stuck with single family homes, and I plan to for the immediate future. So my typical single family rental property is bought for about $100,000 to $150,000, rents from $1,300 to $1,600, and I put $5,000 to $15,000 of work in it. That usually gets me a pretty good return. Our property taxes in Colorado are very low, so I usually see cash-on-cash returns from 15 to 20% on my properties. Cash flows range from $400 to $500, maybe a little bit more on my properties. So they've been a great investment for me. And really, if I look at multifamily in my area, I can't make nearly as much money on multifamily as I can on single-family homes. Colorado is a really tough market for multifamily. It's one of the highest appreciating markets in the country. There's a lot of big institutional money in the area, a lot of investors who are parking cash into real estate as kind of a safe haven, not because they want to make a bunch of money or get really high returns, just because they figure it's a safe investment, a way to diversify their money. And the easiest way to spend a lot of money on real estate is to buy bigger projects, multifamily projects, complexes. So those projects are usually bought by people with cash who aren't looking for huge returns, and that just pushes the price up like crazy. So cap rates in Colorado are probably around 5% or less on multifamily, whereas other states, other areas of the country, you might be able to get 10% or higher cap rates on multifamily properties. Single family homes, I can get cap rates 8%, maybe a little bit higher, but really, I'm looking at cash flow. I don't look at cap rates. I want to see how much cash I have invested, how much money I'm making on that cash, to decide if it's a good investment for me as far as rental properties go. So the other advantage for single family homes, besides the fact I can make more money on them, which is a huge advantage, is they're usually easier to manage, easier to maintain. Now, if you're buying really cheap, $30,000 properties, they can be higher maintenance. They can have more turnover, more problems. The older the house, the same, the more problems it can have. Most of my properties are 40 years old or newer. Most of them are remodeled when I buy them, so they have very little maintenance, very little repairs needed as I own the properties. In single-family homes, the tenants in those houses, they've got their own yard, they've got their own garage, they've got their own house, and they tend to think of it as their own house more than, say, someone who's living in an apartment would. So in my experience, people who have single-family homes and live in them as tenants take better care of them. If things break, I will have tenants who fix those things themselves without even calling me or telling me, which I don't always like that if they don't fix it right. But they're not calling every couple of days for, to bug us and hassle us. They think of it as their own house. They will ask to paint it, to make improvements on the home, do different things. Now we don't always allow that. We have to make sure they're not hurting the value more than helping it by things they do. But it just shows that they have a more pride of ownership when they own that house than, say, someone who's in an apartment where they know they're going to move out in 6 months or a year and move on to a different place and they have no connections to it. And so that's another advantage of single-family homes, is many of my tenants have lived in the houses for multiple years. Some of them 3 years, longer. I know my parents have a rental property where they've had the same tenant for 15 years. It's a huge advantage when you don't have that turnover, don't have to re-rent the property, when you have those tenants who think of it as their house. They live there. Even if they're paying rent, many of them feel like, hey, it's my house. I've lived here for 10 years. It's part of who I am, and they take care of it. Well, that's one big advantage of single family. As far as maintenance goes, I mentioned that, but painting, carpet, things like that, the longer a tenant stays in there, usually the less of that stuff you have to do. As long as you keep an eye on the property and make sure they're not trashing it while they're living there for 10 years, you should be in pretty good shape. With my single family rentals, the tenants also pay all the utilities. So they pay gas, electric, water, trash, everything they pay. They're responsible to mow the lawn, they're responsible for snow removal, they pay the water bill for watering the grass. All of that is their responsibility. When you're doing multifamily, many times the landlord is paying for water. The landlord is doing yard maintenance. The landlord is paying for heating or electric in some cases. In some cases, the tenant pays for it. The landlord has to do snow removal in parking lots, things like that. So there's much more maintenance, more cost usually when you're dealing with multifamily versus single family. Another factor I like, which it doesn't really affect me too much unless I'm refinancing the property, is valuing and valuations of single family homes. So when I buy a single family property, its value is based on what other owner-occupied buyers will pay for the house. What will they pay for it to live in it, have as their own house? It's not really valued based on how much income it will generate, because most single-family homes are sold to owner-occupants, and there's a bigger market for owner-occupants and investors. So if there's more demand, more single, owner-occupied buyers wanting to buy homes, prices can go up, and the value is based on demand by owner-occupants and not really the income. So on multifamily properties, if you buy those, prices aren't just going to go up unless the fundamentals of the property change. If you can increase the income, decrease the expenses, get a higher net return on the property, then it will be worth more. Or if for some reason investors decide they want to start paying lower cap rates, then maybe your property will become worth more. But in most cases, there will be higher appreciation, higher value increase with single-family homes than multifamily complexes. So that's another reason I do it. Like I said, I don't plan to sell my houses, so it doesn't affect me in a huge way, but when I refinance, it does help me out a lot when I'm buying those properties. They go up in value, and I can take more money out through a refinance, buy even more rental properties. And finally, probably one of the biggest advantages to me in buying single-family homes is the availability of good deals. So in my market, there are few multifamily complexes around, multifamily properties. There's some, but there's just not that many. There's many, many, many more single-family homes. And just due to the sheer volume of single-family homes versus multifamily homes, I can get better deals on single-family homes because the more of them there are, the better chance there is there'll be an awesome deal on a single-family home than a multifamily property. So if I'm buying a short sale, if I'm buying a foreclosure, an estate sale, some other distressed type of sale, I have a much better chance of finding a single-family home I can buy cheap than a multifamily property. And that might be part of the reason why cap rates are higher in Colorado, is because there's not that much multifamily, and when they do come up for sale, the investors really go after them and push prices up. So when I buy a single-family property, I'm looking to get it at least 20% below market. So I can buy it below market value, make some repairs, get it rented, and I walk into it with 20% equity usually right off the bat, which is a huge advantage. Now, you can do that with multifamily, but I think it's tougher because multifamily is valued based on the income it generates. Usually, if you're getting good deals, buying below market value, there's something very wrong with the property. Rents are really low, so you've got to kick people out or raise rents to get them up. The property's in really bad condition, so you've got to go through, remodel it, redo the whole property to get those rents up, or something else is wrong to cause it to be valued less than what market says it should be. With single-family homes, there tends to be kind of a bigger spread, and the reason is owner-occupants drive the single-family home market. So most owner-occupants are going to get a loan. They're going to use FHA, conventional, VA financing, and homes have to be in a certain condition to get a loan with VA, FHA, conventional. If the homes aren't in that kind of condition, most owner-occupants cannot buy that house. So that makes it have to sell for a big discount compared to other houses that are in lendable condition. So that creates kind of this opportunity for investors to come in, buy those single-family properties that maybe don't qualify for financing, don't have the same, aren't in great shape, so the owner-occupants can't buy them. And you may ask, well, can't you do the same for multifamily? And yes, you can. If properties are in bad shape, you get a discount. But the difference is most investors who are going to be buying multifamily have more money. So they might be able to use different types of financing or cash where they're not as deterred from buying the properties that need work as the owner-occupants who just simply can't get a loan to buy that property. The investors can probably still buy the property. It's just a matter of making up for the deferred maintenance, the low rents, the problems they'll come up on. So there's definitely two huge differences when buying single-family versus multifamily homes. Now, having said all that, I'm not saying you can't make money in multifamily. You can't make a lot of money in multifamily. I've interviewed a couple people on my podcast recently, Michael Blank, Joe Fairless, who have done awesome with large multifamily complexes. But it's a lot of work. It takes a lot of due diligence, a lot of experience. You really have to know what you're doing to get into the really large multifamily projects. Now, one opportunity for people just starting out, looking to get into the business, is something called house hacking, which is, you buy a 2 to 4 unit property. You live in one of the units when you first start out. That lets you have an owner-occupant loan, so you can get 5%, 3.5% down, much less than what is normally required for an investor. You live in one of the units for a year. You can rent out the other units while you live there. If you do it right, if you buy the right property, a lot of times you can get your mortgage payment paid plus make money while you live in the property, buying multifamily if you can live there. So there are some huge advantages to multifamily in certain cases. Now, one thing that really helps with house hacking is you live there, you're collecting rent, you're proving it's an income property while you live there. You can use the same strategy for a single family home, move in, live there for a year, then rent it out, but you won't be able to count any of that rent income in that first year because you're living there as an owner-occupant. So we've covered a lot of information in this video. Multifamily is not a bad investment. I think a lot of it depends on your market, what you can make in your market. Not just, multifamily is great or single family is the way to go. Look at your market, look where you can make money, where there are opportunities, and then make your judgment based on that. All right, thanks for watching. Again, lots more information on InvestFourMore.com.